Hi guys, how you doing? This is Dan from Index Option Trading on October 5th, 2009 after the market close, and here's the chart for year-to-date chart for SPX. And what is happening here is that we had come down and hit this long-term trend line at 1025 and bounced off here with a nice candle here. The stochastics is oversold. SPX is about 40 to 50, and that is what the action is really. If you look, let's take a look at 20-day, 30-minute chart on SPX. We were consolidating here, and then on October 1st, 30th November, October 1st, we broke down here and came down and hit this long-term rising trend line at 1024, 1027, and then now today we moved up to 1040. The market is just was overbought, and this was expected that it will go down and hit this thing trend lines and start moving up. If it had gone through and penetrated these trend lines, then we could have said there's a case and a thesis that this is a trend change, but that is not exactly what has happened here. Let's go quickly and look at RUT, which is 20-day, 30-minute chart. Same story here. We broke down here, hit this major trend line at 580 and bounced off to 591. And that is very normal textbook classic case technical chart study. This is just textbook, and this is also same thing here. Broke down here on NDX 20-day, 30-minute chart and bounced off this rising trend line here, and then we moved up to 1675, which is the level that we're traversing now. Let's take a look at SPY, which is our ETF, and that's a 20-day, 30-minute chart. Same story here. We're bouncing off here, and let's try to take a look at this thing on year-to-date basis here. And this is what is happening here. The SPY came down here, met this support at 102 levels, hit this long-term trend line that we have established since March, and buried with it underneath it is the 50-day moving average. So both these things acted as a barrier for the bears not being able to penetrate this thing. It's too tough a resistance here, and the market just bounced up. Also, the stochastic is um, oversold, and so there was no place for the market to go but to go up, and that's what exactly happened. The volume was low here, but nevertheless, we managed to move up higher. And again on IWM year-to-date chart, we came here as you see in this chart, hit this trend line at 57.50, slightly above, and then moved up to 459.04. The volume came in a tad lower than Friday and Thursday. The stochastic is very oversold here levels, and the bounce is still coming here. Most of our positions on IWM and RUT are below this trend line, and that was the technical reason we chose these positions to be. So in case the market came down here, we would be protected by these two barriers, the 50-day moving average and the rising trend line. And that is the case. So far so good, and looks like the market is poised. Intermediate term is higher because we're making higher highs and higher lows. The previous low that we made was about 55 on IWM. Now it's about 57 and a half. So as long as we keep on making higher highs and higher lows, we're advancing upward, and there's no trend change, nothing at all in the horizon so far. Now it can change on a dime, but we don't know this. And so far so good. So this is what we have for today, and I'll update these charts here in a day or so.